Hey, Julie. Hey there, everyone. Welcome back to another episode of the Female Empowered Podcast. I'm once again, your host, Krista Gurka, same person here every week. And we are approaching 300 episodes. I don't know about you, but to me, this is episode 278. I cannot believe that I've done 300 episodes. It's crazy to me. But today we're talking about how to fund your business growth without dipping into your personal finances. And it's a conversation we've really been having a lot in all of our both of my membership groups, the monthly membership and then the high ticket inner circle mastermind. And I thought, let's just do an episode about it. There's a lot of conversation about finances. And I think what keeps a lot of us small business owners from growth is lack of cash flow. And for a long time, I felt like I just had to come out of my pocket for that. And when I didn't have it, I was like, okay, guess we're not doing anything, right? There's a whole other episode I've done about money mindset and all that stuff. And actually, if you're interested, there is a free resource on my website, kristagurka.com/audio courses, I think it is. Or if you just go to kristagurka.com and check out the free resources, there is an entire library there of free resources all around money and finances in your business. Okay. So, but today what we're going to talk about is how you can get access to money, to capital, without going into your personal savings or taking on additional investors. If you don't want to give up some of your shares in your business or give up some of the equity in your business. For so long, and we've had this conversation in our group, especially with the money team, my bookkeeper and everything. Oftentimes, at least my experience has been as a physical therapist, I had to take out so many loans to go through school. I came out with so much debt that this is currently 2025, and I'm still paying off my student loans. I graduated in the 1900s. So, yeah, debt is real. We pay down our credit cards every month. We try to pay as much towards our mortgage as we can, but I still have my student loans. I think my kids will not have loans or will be done paying off their college before I am. But anyways, so I think a lot of us are just resistant to taking on debt. So what I want to explain today is how you can kind of flip that mindset on its head and not think of it as taking on debt, but think of it as like you're keeping your cash on hand so that you can pay back this debt little by little and you're not cash poor. Okay. So that's something that we want to talk about. And most of us in our business, we're looking for $20,000, $25,000, $50,000, $100,000. It's not like we're looking for $10 million, a capital raise of $10 million. So here are some ways that you can get access to capital without dipping into your personal savings. So number one, small business loans. Okay. The SBA, Small Business Association, is a great place. It's a government-backed loan with pretty competitive interest rates. Okay. They can go up to $5 million in capital. So it's something that you should definitely consider. Now, a lot of people will look into SBA loans prior to starting their business. Sorry, a little sip of water there. Or while they're growing their business, or say you want to buy another business, you can look into an SBA loan. It's the same way as if you had to buy a house, but you couldn't put all cash down, you get a mortgage. It's very, very similar. It's basically a loan, right? To help you pay for it. So now there are a lot of hoops to jump through when you work with the SBA, but it allows you to buy into a business that you don't have to come up with all the money right away, or you can fund an expansion without having to come up with all the money right away. So it's something good to look into, the SBA. And also the SBA organization near you also has a lot of resources to help you as a business owner. So besides just being able to provide some capital, they do have some really, really great resources for you as a business owner. All right. So now there's other online lenders that you can look into, things like Kabbage, spelled with a K, Kabbage, On Deck, Fundbox. Those are faster approval rates usually than banks, but the interest rates are usually higher. Okay, so the easier it is to get the loan, usually the higher the interest rates, the more you kind of have to pay for it. But looking at Kabbage is a really, really good way. If you don't want to go through your traditional bank, or you don't have a traditional bank. I don't know why you would not have a traditional bank. But now the other way, and this is a way that I funded my growth, was through business lines of credit. Okay. It's similar to a credit card. However, you get lower interest rates and very flexible repayment. So there you could get a line of credit through credit cards like American Express. You can get it through Kabbage. You can get them through PayPal. You can get them through QuickBooks. You can also get them through your bank. So I went through my bank, and I currently have a $100,000 line of credit that I can pull whenever I need to. So for example, if we're going to do a renovation and I don't want it to come out of my operating expenses, I could take $20,000, $30,000, $40,000 out of my line of credit and then pay that back a little bit at a time. I want to say my interest rate right now is maybe 5%, 6%. I'm not 100% sure because I have a line of credit from several years ago, 6 or 7 years ago. And oftentimes it's just like right now, I haven't drawn anything from the line of credit. We have positive cash flow. We don't need it. But if I don't want to dip into my reserves, I have access to that so that we can do some growth if we need to, especially if it's a big growth. That's how we opened the second location. We did it with a line of credit. And so if I was going to open up another studio or additional rooms or build out, I would probably take from my line of credit because I already have it. I don't have to go through the paperwork. I just transfer it into my business account. So lines of credits are great ways to get access to capital. Okay. So here's another one, revenue-based financing. So lenders provide upfront capital in exchange for percentage of future revenue. Okay. Common providers are Clearco, Pipe, Lighter Capital. However, I don't know that these, unless you're a business that has a really strategic and really big scale strategy for which to grow, I don't know that businesses usually are interested in having future bite of our apple if the apple's not that big. Okay. But it is something to consider. So the other thing is if you're purchasing inventory or equipment, oftentimes you can get financing through that provider, that vendor, right? So you can finance, like for example, Balance Body has financing options that you can buy reformers and buy equipment and finance it over time. So you pay it over time, you pay some interest, but you're paying a little more over time, but you get to keep your capital for right now. You get to keep your money in the bank and pay for reformers a little bit at a time, because that's an expensive lift, an expensive overhead cost for studio owners specifically. Now, another way is grants, okay? Grants are great if you can get a grant. Oftentimes, the drawback with grants is just that there are a lot of hoops to jump through because everyone's trying to get some free money. And what's great about grants is you don't have to pay them back. It's free money, but you have to apply for it. Usually you have to win, you have to qualify, all sorts of things. So there are a few women-specific business grants out there. The Amber Grant is one of them. I think they do $10,000. It might be a month to a female founder. Okay, so the Amber Grant. Cartier has a women's initiative where they give out a grant, and the Tory Burch Foundation has a grant. So look them up. Amber Grant, Cartier Women's Initiative, and the Tory Burch Foundational Grant. All right. You can also get industry-specific grants. Corporations and nonprofits offer grants for wellness, fitness, healthcare businesses. So you can look up, in your area, or the SBA might have some information on this, of which uh, corporations are offering some industry specific grants, things like Amazon, American Express. There's a bunch of places that do offer some grants. So looking in your area, talking with the SBA, looking at other business, maybe the Chamber of Commerce has some information about where you can look for grants, but there are grants out there, okay? You have to look for them. So we got a grant, for example, when we were growing and we were implementing a new, not really a business model, but like an operating system to the business. And I applied for a grant through the state of Florida that was, it was a grant that provided small businesses with less than 20 employees the opportunity to do innovative training so that you can hire more people. And this was when I was going to hire an operations manager. I was going to promote people into management. I was going to grow my administrative team. And so I was able to qualify for an $80,000 grant to pay to go through this program with myself and my team. And so there are state grants and there are grants for different types of industries, especially women. You can do women of color, you can do female founded grants, you can do minority grants. There's a lot of stuff out there that you can look into and see what's available to you and where you can have the opportunity to access some capital. Okay. Another idea that you can use is what we call crowdfunding. Okay. So basically, you promote your business on platforms like Kickstarter or Indiegogo, where you can basically put this out there and ask for investment. Okay. So you can do that on these little Kickstarter. Indiegogo's more of like a product-based platform. Kickstarter is, and you can look for angel investors. That's another way. But crowdfunding is a way a lot of businesses have tried to fund their growth. All right. So the next one is strategic partnerships or joint ventures. So maybe you create a strategic partnership with a equipment manufacturer, right? So if you're going to open up 4, 5, 6, 7, 8 studios, maybe you work with Balance Body to get a discount on your equipment. All right. What about other complementary businesses where you're growing more, maybe different platforms like a scheduling platform? So how can you create joint ventures and strategic partnerships that will allow you some um, decrease expenses, right? Another thing that you can do is oftentimes, and we did this with my mastermind group one time, we all kind of came together to order merch in bulk. So we ordered the shirts, you get them for much cheaper if you're ordering 1,000 shirts or 5,000 shirts and if you're ordering 100. So we all got together and ordered a bunch of shirts together and then we took them separately to the printers, but we were able to get that big chunk in manufacturing and we were able to get our shirts down to like $2 a shirt. And then obviously we have to pay for the printing, but it really helped decrease our costs when we created that strategic partnership. Obviously, there's partner sponsorships. Companies provide funding, equipment, resources in exchange for brand alignment. This is obviously very common in the fitness and wellness industry where they give you clothing or sneakers or things like that to help promote your business and then they will promote your business, brand collaborations. It's another way that you can try to get some of your costs down a little bit. All right. Then here's another one. I've never heard of this one before, but it came up in my research. It's called Community Development Financial Institutions, nonprofit lenders that provide capital to underserved businesses, often at better terms than banks. So again, Community Development Financial Institutions, so CDFIs. And I guess you could look that up. I had never heard of that one before. So you can look it up and see if that's available to you in your area. So one of the things that I want to just remind people about getting loans is it's like buying a house or a car. You need to have proof of income. So Banks, lenders, they don't care about how much profit you have in the bank. They want to see W-2 employment salary. So if you are not an S corp and you are not paying yourself on payroll, you should try to do that as quickly as possible so you can qualify for this funding. Okay. Um, and if you are an S corp, but you're not paying yourself very much, and you're like, oh, I'm just going to take it all through the business, like I'm going to pay my gym through the business and I'm going to do this through the business. No, it's a better idea to pay yourself a higher salary and then pay those other expenses through your personal bank. Okay. So that's just my little tidbit there. Now, I wanted to go through a little bit of the grants that I found while researching this because I think it's actually kind of cool. Okay, the Amber grant we discussed offers three $10,000 grants monthly to women-owned businesses, and at the end of the year, an additional 25,000, okay, is awarded to three grant winners from that year. So it's open to all women entrepreneurs across various industry, and there's a simple online application. So look up, I'm sure it's ambergrant.com. Okay. Another one is Eileen Fisher Woman-Owned Business Grant Program. So it awards a total of $100,000 annually to up to 10 women business owners who make a measurable impact on society and the environment. So if you're someone that really is doing very sustainable things in your studio, the place how you buy the socks or the equipment, or the way that you try to use biodegradable and sustainable products to clean your equipment. So the eligibility is businesses must be majority women owned and have been operational for at least 3 years. And it requires a submission of a detailed proposal. All right. So that's the Eileen. And then Eileen is Eileen, Eileen Fisher, Woman Owned Business Grant Program. Then you have here the Big Idea Grant. It provides $1,000 monthly to ambitious women entrepreneurs, along with access to mentorship, resources, and a wealth mindset coaching group. Big idea. All right. $1,000 monthly. Applicants must identify as women entrepreneurs with a clear vision for their business. Applications are accepted on a rolling basis with one recipient each month. The Big Idea Grant. So if you're looking to win $1,000 and want to have access to mentorship resources and a wealth mindset coaching program, check it out. Okay, this is the Cartier one that I was talking about, Cartier Women's Initiative Award. It's an international business plan competition that aims to support female entrepreneurs leading early stage for-profit businesses. It's open to women-run for-profit businesses in any country and sector that aim to have a strong and sustainable social and environmental impact. So it's kind of like the same as the Eileen Fisher one. So socially, like say you want to bring Pilates to an underserved community. Like that is a great social, that's having social impact of helping people in an underserved community learn how to move better, breathe better, live better. Okay, so that's the Cartier Women's Initiative Award. Now, another one is called the Dream Big Awards. It's hosted by the United States Chamber of Commerce. These awards recognize the achievements of small businesses and honor their contributions to America's economic growth. Open to small businesses in the US that have been operating for at least 1 year, have less than 250 employees, and gross revenues of less than $20 million. So that is all of us that's listening. Okay. I don't know anyone that's listening to me that has over $20 million. So it requires completion of an online application detailing business practices, including staff training, community involvement, customer service, and strategy. Dream Big Awards. At the very least, go check them out. All right. If you decide that this is not in your wheelhouse, or you are not, this is really not like, you don't qualify for them, then that's fine. But at least go check it out. Okay. Okay. So I hope that you at least learned from this that you don't have to go into personal debt. You don't have to put things on your personal credit cards and go into personal debt in order to fund the growth for your business. There are lots of opportunities out there. Some of them require a little bit of work. True, but anything worthwhile requires a little bit of work. All right. The other thing that you can do that we didn't talk about on this is one of the easiest things to do is get a no interest credit card, usually no interest for a year, and you can finance your stuff on that credit card. Now, the important thing is really just to make sure that you pay everything off before that year is up, because the interest has been accruing and it's compounding over that year you're not paying it. So make sure that, if you bought $10,000 worth of equipment, you don't want to come out of pocket for it, you can get a no interest credit card and pay $1,000 a month. Okay. Allows you to keep your cash and you're actually not paying any interest on it. It's just allowing you payment plans for 10 different months. Okay. So I hope you found this interesting. It's kind of short and sweet episode. If you have any questions, I invite you to go DM me over on Instagram. I'm at Krista Gurka. And until next time, my friends, bye for now.